Hi, my name is Mike Clover. I'm with Homewood Mortgage here in the state of Texas. Today is Wednesday, April the 9th. Here are the mortgage rates and a brief market update. Be sure to stay tuned for this update every Wednesday. Okay, so the scenario for mortgage rates is going to be based on a 500K sales price and a middle credit score of 740. Okay, so here are the rates on three products: conventional, VA, and FHA. The conventional mortgage rate today with 20% down on a 30-year fixed is 6.99% with an APR of 7.192%. VA with 100% financing is 6.375% with an APR of 7.395%. FHA with 3.5% down is 6.49% with an APR of 7.462%. Here is a update on the market. Okay, the U.S. jobs market is showing signs of resilience, with employers adding roughly 228,000 jobs in March. However, there are also indications of cooling, such as slower hiring rates and a pullback in quits. So here's a more detailed look at the current market. Job growth in the U.S. economy added 228,000 jobs in March, like I just mentioned, according to the Bureau of Labor Statistics. The unemployment rate remains at 4.2%. The labor force participation rate is at 62.5%. Wages increased 3% on a monthly basis. Job openings, the number of job openings was little changed at 7.6 million in February, but down by 877,000 over the year. Layoffs and discharges. Layoffs and discharges increased in retail trade, real estate, and rental, leasing, and of course we all know about the layoffs in the federal government. So, sector performance. Key sectors like healthcare, government, and leisure and hospitality continue to support job growth, but may face some headwinds. So here is my overall assessment. The labor market is considered to be in decent shape, but there are signs of cooling that are consistent with employers navigating uncertainty, of course, due to the tariffs. Here's my opinion. Okay, and this is just my opinion in regards to everything that's taken place in the U.S. currently. I believe it will be a bumpy ride as the trade wars continue. Okay, and I think most economists would agree with that. But I am for certain, and without a doubt, we are headed to what was called the Gilded Age in this country that took place back in the late 1800s without all the issues as a result of that era, just the prosperity part. Thank you for tuning in. Be sure to like and subscribe and check in every Wednesday for a market update and interest rates with our company. Thank you.